Right, small and medium enterprises and the ability to access credit from Kenyan lending institutions, the challenges and the potential solutions to that. That's what we talk about this morning, and we want you to be part of that conversation. That's why we ask you in our question of the day this morning: are you a small business owner? Are you a small and medium-sized business owner? What are the challenges that you're faced in accessing credit from lending institutions? What are the challenges that you faced in accessing credit from, of course, lending institutions to start and expand your business? You can tweet us at NTV Kenya and at Victor Kiprop_. Make sure you use the hashtag #NewNormal so that we can see the tweets that you're sending us. You can also do the same on Facebook, YouTube, and Instagram, where we're streaming live. If you want to call in, you can also do that, by the way. The numbers will be below your screen in a short while. But before that, COVID-19 is still with us, and it's our responsibility to inform you, of course, on the latest. And these are the latest figures in terms of infections, deaths, and recoveries across the world. According to Corona Tracker, 222,737,866. That's the number of people who've been confirmed with COVID-19 so far across the world. 199,246,415 of them have recovered. But sadly, we've lost 4,599,534 people to COVID-19 across the world. Let's get you the figures for Kenya now, and these are the latest figures from the Ministry of Health, which of course gives daily updates. For Kenya, 241,134. That's the number of people who've been confirmed with COVID-19 so far in Kenya. 229,762 of them have recovered. Of course, this is in hospital and are also at home. And sadly, we've lost 4,800 people to COVID-19 so far in Kenya. And this number continues rising. That's why we remind you to follow the protocol set by the Ministry of Health, which includes washing your hands and sanitizing as regularly as you can, masking up at all times, and maintaining the 1.5 meters social distance wherever you are. But let's give you a quick update of the biggest stories in Kenya and across the African continents at this moment. And we start with COVID-19. And the Interfaith Council in Kenya is calling out politicians over the ongoing rallies, which accommodate huge crowds, further causing a rise in COVID-19 infections in the country. This comes as research firm Infotrack findings show that COVID-19 pandemic has burdened the country's health sector, as of course my colleague Helen Aura lifts some of the worrying findings from that report that touches on access to healthcare facilities.
The COVID-19 pandemic has no doubt caused the economy, and a closer look at the personal impact on Kenyans gives an even clearer look at the effect. According to data released by Infotrack, COVID-19 hospital case management per day costs around 21,359 shillings for asymptomatic patients and 21,361 shillings for patients with mild symptoms. Patients with severe cases have had to pay 24,705 shillings per day for treatment, while those under critical care have parted with 51,684 shillings. Those costs have had to be incurred by majority of Kenyans who do not enjoy comprehensive medical covers that are at the disposal of politicians. That is why the Interfaith Council is urging the leaders to follow the regulations.
And the number of deaths we have witnessed have been devastating. For us, Interfaith Council, who are from the various faith groups, on the ground we have noticed more than tripling of the number of deaths. We have seen the number of mortuaries overloaded. And I speak even of my own backyard in Nyeri, where even the supply of coffins cannot meet the demand of the deaths.
According to the survey, 2 in every 5 Kenyans sought help from relatives and friends to offset the medical bill, while 1 in 5 used their savings to pay for treatment. 1 in 4 Kenyans have either contracted or known somebody who has contracted COVID-19, and about 1 in 5 Kenyans know somebody who has passed away from COVID-19. Rather than aid in the abuse of pulpits by politicians to spew politics rhetoric, the Interfaith Council is now offering their houses of worship to be centers of inoculation.
The vaccination, especially of the elderly, because a large part of the people who are dying are elderly, is crucial. And so we appeal to all people to think about their elderly parents and grandparents We will use our places of worship in order to try to sensitize our people.
The government hopes to vaccinate at least 10 million people by December 2021. Helen Aura, NTV.
Let's stay in the country where at least 2 million Kenyans from 10 counties have been affected by drought, according to the national government. The Devolution Cabinet Secretary, that is Eugene Wamalwa, however, says the government, with the help of other state and non-state actors, are working to cushion the affected families. The national government has so far released over 1 billion shillings to support vulnerable communities in Garissa, Wajir, Mandera, and Isiolo counties.
More than 200,000 residents in Garissa County are facing hunger and starvation as drought continues to wreak havoc in many parts of the country, with over 1 million livestock in desperate need of water and pasture supplementation. Animals have been left weak and some are dying as most of the grass has been consumed. The drought situation, which has affected over 2 million people, is worse in northern Kenya. Devolution Cabinet Secretary Eugene Wamalwa said the current drought situation is still at the alert stage and under control.
And these are the people that we are targeting to ensure they have clean water through the water tracking program we have started, and to also ensure that their animals get feeds. And this is part of the program we are launching today. And through the cash transfer programs, we will be able to improve livelihoods of those who are affected.
The national government has so far released over 1 billion shillings to cushion the vulnerable in affected counties.
The government is expanding the hunger safety net program to 4 other counties, including this county of Garissa, and we will also be expanding it to Tana River. We will also be expanding this program to Isiolo and Samburu. Of the 10 counties affected, these 4 that I've mentioned are actually quite affected also. In the next 2 weeks, I will also be releasing another 558 million shillings to the 4 counties, and it's an ongoing program.
The region is expecting the short rains in October, but experts say they might be below average.
Let's cross over to West Africa now. And the special forces who seized power in Guinea, of course, on Sunday, have begun releasing political detainees who, of course, were thrown in prison during the reign of the deposed president, that is Alpha Conde. At least 20 prisoners, including prominent opposition figures, were released on Tuesday evening. Even as lawyers representing the detainees said that 79 people had been cleared for release in discussions with the military. The special forces, led by Lieutenant Colonel Mamadou Doumbouya, staged a coup in the mineral-rich West African country on Sunday and arrested President Alpha Conde, sparking international condemnation. The military has, however, pledged that a government of national unity that will ensure political transition will soon be installed. Also, a Kenyan long-distance truck drivers union and South Sudan Freight Forwarders Association have condemned the recent killings of Kenyan truck drivers in South Sudan. They are calling on the government to beef up security. According to them, more than 20 drivers have been killed ferrying goods into South Sudan. The deaths have resulted in an impasse, grounding hundreds of trucks at the border points in protest. The drivers ferrying goods worth millions of shillings are unable to access the volatile areas, fearing rebel attacks. The threat has since affected the earlier seamless trade between the two neighboring countries. They are now calling on both the governments to intervene and find
We
a
don't
lasting
want
solution.
to hear any more death from Southern Sudan. We want to work as 2 countries, as brothers and sisters.
To stand in solidarity with our brothers from Kenya long distance drivers, to strongly condemn these frequent attacks on the drivers, killing of the innocent drivers. We in private sector, Southern Sudan private sector, we term this thing as barbaric, it is evil, and is not acceptable.
Let's cross over to Afghanistan, where in the pictures that we're about to show you just now, a flimsy grey curtain divides a university classroom in Kabul. On one side sit the male students, and on the other side, the female students wearing hijabs. It's a glimpse into what the education system could look like in Afghanistan under the Taliban rule, as some students returned to classrooms to start a new school semester this week. The Taliban, of course, took over power in Afghanistan a few weeks back.
قراردادهایی از تحت عنوان مرابحه و انواع قراردادهای دیگر در تئوری‌هایی که در عنوان با عنوان اقتصاد اسلامی گفتیم مطرح شده خلاف
Time to kickstart our conversation of the day about micro, small and medium enterprises and their access of credit. And we want you to be part of that conversation. A reminder of our question of the day: are you a small business owner? Are you a business owner? What challenges do you face when obtaining loans to start and expand your business? You can be part of this conversation by tweeting us at NTV Kenya and at Victor Kiprop _. Use the hashtag #NewNormal. You could also send the feedback on Facebook, Instagram and YouTube, where we're streaming this conversation. And you could also call in on the numbers which will be below your screen in a short while. But even before we get your feedback, we asked Kenyans across the country what they think, especially business owners, what they think about, of course, the challenges they face when trying to access credit to either start or expand their businesses. Let's get to hear what some of them had to say.
Sisi kama vijana tuna challenges za kufanya biashara kwa sababu ya issues za finance. Kwanza ukienda pale kwa bank unapata kuna restrictions mingi sana za kupata mkopo pale. Unaweza ambiwa kwanza utafute watu kama guarantors. Guarantors unaweza ambiwa upeleke kitu kama title deeds ama logbooks za gari, ambapo sisi kama vijana hatujaweza kwanza kupata vitu kama hivyo. Utapata kuna vitu hivi vidogo kama hizo farms ndogo za kupeana mkopo kama Tala, Fuliza, na kuna pia microfinances. The same way wale watakupatia pesa kidogo na watakupatia time limit ndogo sana, ambapo haitaweza kukua imekusaidia. My appeal to the government is that wangekuja na kama provisions za kuweza kusema watafungua SACCOs ambapo wataweza kuweka youth funds, ambapo vijana ukiwa na biashara yoyote unaweza enda pale iangaliwe na uweze kupewa mkopo.
Sisi kama producers ama wasanii imekuwa ni vigumu sana kupata loan, maana masharti ambayo yamewekwa pale hatuwezi tukayafikia. Maana zingine wataka kuongeza mashine ama wataka ku-upgrade, unapata shida maana hawakutrust. Alafu mahitaji yao pia ni magumu sana. Hata ingawa kuna machines, hawezi tumia machines kama Collateral. Sisi kama artists pa producers, it is very impossible to get loans from banks, kupata mkopo kutoka kwa benki tofauti. Manake pia nimesema they don't trust us. So inakuwa ngumu sana kwao kupea pesa ama kupata pesa kutoka kwa benki ama SACCOs tofauti.
Is quite challenging as a poor person to acquire a loan to start a business. First of all, there is need for guarantors. Guarantor loan, the person might not trust you whether you will be in position of running the cash or not. So there are a lot of challenges that we as youth we go through, and that's why as a youth I can propose to our government. They put into consideration a lot of amendments in line of what should be done for the youth of this country.
Right, a section of business owners across the country just giving their views on the challenges that they encounter when they're trying to access loans for whatever reason they have for their business, whether it is startup capital or to just scale up or expand. And we'll be hearing from the experts who will help us, of course, dissect today's conversation. And joining me in studio this morning is Jason Jogu. She's the head of consulting at the Kenya Association of Manufacturers. Good morning and welcome to the show.
Thank you.
All right. Also joining us virtually this morning is Victor Agol, is the managing director of VIFA Consult. Victor, it's good to see you again. Welcome back to the show this morning.
It's good to be here.
All right. Also joining us this morning, representing the lending institutions, is Habil Olaka, is the CEO of the Kenya Bankers Association. Good morning, Habil, and welcome to the show.
Good morning, and thank you.
All right. The role of government in this conversation cannot be ignored. This morning, we're joined by Mr. Richard Iperu, who is the Director of Strategy and Planning at the Micro and Small Enterprise Authority. We'll call it MSEA. Good morning, Richard, and welcome to the show.
Good morning, and thank you.
All right. Maybe we can start this conversation here, but let me just start with Victor, with your introductory remarks, your reaction to the sound bites we've just played from different Kenyans and business owners across the country.
Yeah, so I think the credit situation for micro small businesses is dire and continues to be dire. And of course, this doesn't come as a surprise, given that, you know, for the last 5 years or so, the issue around access to finance has been there. If you remember, you know, and access to finance, of course, is a factor of other issues that you know, affect the economy. If you remember, 2017, 2018, we had a disruption due to elections, which has a direct bearing on you know, businesses getting finance through sales. Remember, the easiest and cheapest way of financing your business is made through sales, where you can be able to get profit that you can be able to invest back. We had the issue of drought, which is still coming up this year. We've had the issues around pending bills. We had issues around interest rate cap. And of course, now we have disruption, of course, due to Corona. And if you remember, also in 2020, government had a economic stimulus program, which I think, if you look at you know, studies such as World Bank, you realize that some of these interventions that was meant to you know, bring cash flow to SMEs were not as optimal. So it means that SMEs are still struggling to access finance. Of course, now, if you have to look at internally from an SME perspective, the mismatch between SMEs, with majority of them being informal, as vis-a-vis the business model of banks, it means that you know, SMEs continue to struggle to access financing.
Okay. Allow me to just bring in Richard, because Richard, this conversation has been ongoing for quite some time. But I mean, are we seeing any progress? If you look back 10 years and right now, is anything changing maybe from where you sit?
Thank you, Victor. I think much has changed from, you know, if you compare 10 years ago, 5 years ago, and now, much has really changed in as far as access to credit, particularly to the MSMEs concerned. And I think you must admit that a lot has been done by the government. Many initiatives have been put in place by the government to really ensure that this segment, which contributes to about 30% of the national GDP, gets access to credit, and particularly we're looking at affordable credit. And yes, there's still a number of challenges that the sector faces by virtue of the uniqueness of the sector, like the aspect of trust among the MSCs, really where an individual or an MSC is required probably to produce or to have guarantors for a credit facility.
Yeah.
And I know it's an area that some players are uncomfortable with, but you know, it is something that, you know, we need to understand that this player probably need to really understand what the player is doing, and if it is a guarantor, probably that is it's actually is an easier, we consider it an easier way of collateral of security that this player or this MSC can use to access credit. The government has put in place a number of interventions that we'll discuss, really to ensure that we ensure that this segment accesses credit, and the interventions range from direct support to the MSME, and also having institutions that really talk to MSMEs in terms of how to access credit, and affordable credit in that case. The credit can assist them to grow their businesses. There's also a problem with information asymmetry. I understand that probably when it comes to requirements, some of them are basic requirements that one would expect that that an MSC is able to really to provide for him or her to secure credit. But I know to some extent, some will find it to be too rigorous for them to access credit. So, Victor, I think there are many interventions that the government has put in place really to ensure that we really bring this segment of the population to be able to access credit, to be able to really expand their businesses. And in cases where there are startups, there are also interventions that the government has put in place through many agencies to ensure that probably training is conducted to build their capacity to be able to conduct the business profitably and grow and be able to build a credit history to be able to access credit from many agencies. Thank you, Victor.
Richard, definitely I'm very much interested in those interventions. But before I come back to it, let me just allow both Habil and Joyce to give us their introductory remarks. And I'll start with you, Joyce, given what we've just played and what Victor and Richard have had to say.
Thank you, Victor. I know most of the SMEs who have just given their stories are really finding it difficult to access credit. But at the Kenya Association of Manufacturers, we've been looking at what exactly is credit, or do people want to do with the credit facilities or any other financing opportunities. So we are aware credit facilities have been quite a challenge for especially the startups and the micros. The small businesses who have had some time to do business, like for 3-4 years, have a history, especially around their sales and their strategies, where somebody can look at their credit worthiness. The medium-sized have already good relationships you'll find either with banks or other financial partners who can support them in that area. So I know the bigger challenge is with the startups and the micros who are perennially running out of cash due to cash flow challenges. And COVID has not even helped because it has reduced demand in this market and supply chain constraints that have made SMEs either close, or they also can't afford working spaces, or they have challenges just meeting their customer needs, either because of lack of raw materials or money to pay for raw materials, or even just money to comply with some of the regulatory requirements in this country. So that has affected how then they are able to generate good sales and come up with better pricing that can improve their profitability as well as pay in case they take credit. Because credit is just taking somebody giving you money and then you pay it with certain conditions, either if it's some of the government ones which may not, which may be interest free, that's fine, but you still need to pay. Or if they have interest, that's still fine, because I know sometimes we say high interest rates are a problem. But we've seen people getting, all they want is money quickly at the right time for them to get what they wanted, whether it's to pay for raw materials or buy equipment. They need it at the time they need it. So sometimes the interest rate might not necessarily be the challenge, but accessing that credit. So with those many challenges, and in this COVID time, we've seen new emerging constraints that we can discuss over time. But access to credit still needs a lot of information dissemination and also connections or linkages to the right platforms, the right solutions for different categories of SMEs, depending on their size and their age.
Allow me to bring in Habil. Habil, if you, from where you sit representing the lenders in this conversation, from where you sit, if you were to go back 5 years, would you say that we are now bringing bringing much more smaller businesses to a situation where they can be able to access formal credit? Habil?
Sorry, you got there was a bit of a disconnection there, but it's okay. I think I got the question. Thank you very much for that. I think your question about looking at it 5 years ago and today, and the journey that you have traveled on that avenue, I think one is that yes, there has been certainly quite a bit of improvement. A number of challenges were identified. I was listening to the few people who are surveyed, people who are giving their views on their difficulties in terms of accessing credit. And those challenges, I think, have been there all along. But what has been happening is that the policy stakeholders, the policy makers have been listening to those challenges and trying to address and bring in place frameworks that can be able to overcome those specific challenges. Now, a number of them, when I was listening to them, a number of them were talking about they're not able to and one of the reasons they were saying was because they don't have collateral, which is a major challenge for the SMEs because they have not established enough capital base to be able to provide the collateral that financing institutions will normally require. And there is an established framework that has been put in place to allow this credit, these MSMEs to provide the alternative collateral that they may have. Traditionally, financial institutions have looked for example, land and buildings, which is a natural collateral that you would go for. But there is another alternative, which is we call the movable assets, a collateral registry that takes into stock movable assets. So you have got furniture and fittings, you have got equipment, like, your computer, for example. You can even have agricultural products. Your agricultural produce, the crop, the animals that you have. Those can now be used as collateral against which you can be able to access credit. So in the space of expanding the scope of collateral, I think there's quite a bit that has been done there.
Okay.
The other challenge that these SMEs have is the fact that they don't have the capacity to be able to, for example, even have records that can be provided to the financial service provider to be able to assess the capacity of the company to be able to repay the loan, for example. Now, in the space of capacity building, there's a lot of work that is to be done. There is a lot of work being done, but still, we have got quite a number of MSMEs that are still informal. So they don't have any records, they don't have ability to assess their performance. And in this space, where I come from at the KBA, we have got what we call the NUCA Enterprise Development Program. And this is a capacity building program that is meant to support the MSMEs to be able to develop the capacity to prepare, for example, financial statements, to have the resources to be able to prepare some analysis that can be given to a financial service provider to look at and assess the capacity of this entity to be able to repay. It also flows from when you go to a financier, what does he look for? Because that's a very critical thing for the MSMEs to be aware of. Most MSMEs were complaining of the fact that, we go to the financier, they are asking for things, they are asking for this, they don't trust us, and the issue of trust kept coming back and every now and then. But I think we need to understand, when a financier is looking at you, there are 4 things that he looks for. The first thing is the character of the individual. In other words, there are people who go to financial institutions to borrow with the intention of not repaying back. Nothing to do with the capacity. You go to get that opportunity, and once you get the money, you take off. Mark you, the financier is not lending you his money. The financier is taking deposits from the public and on lending them to you with the hope that you will repay back, so that you can then repay back the depositor. And mark you, the depositor expects the money on demand. So whenever the depositor comes for the money, you are supposed to have it available. So it's important to ensure that the people you're lending the money to will pay back the money for you to pay back the depositor. That's the first point. The second point that you assess is the capacity of the borrower to repay back the money. So you are looking at the cash flows that will be generated from the proposal that the customer has. So if he's selling whatever this person is selling, you're looking at, does it have the capacity to generate the cash to not only meet its requirements, but also pay back the loan that they took from me. Now, those first two are very critical. The third one is the collateral, where in the event that, for example, you have not been able to access the capacity properly and the character you are not able to access properly, in the event that those don't work, do you have a fallback position where if the company is not able to repay back, you have got something to fall back on? And so you take collateral. Collateral is meant to be just in the event that the company is not able to repay back. And then the fourth one is the conditions. You put in conditions like, for example, you commit the company not to pay dividends to themselves until they pay you as a financier. So generally, that's a package of what the lending entity looks at.
Habil, I think what I've taken down is 4 C's: character, capacity to repay, collateral, and conditions. But let me just start with something maybe about capacity there, and I think Joyce might want to weigh in on this, which is, I mean, for you to be able to lend to these people, they should be able to demonstrate that indeed I'm generating this amount of cash per day and I'll be able to somehow in a way be able to repay you. But as a small business owner, I would also argue that, you know, part of this formalizing thing is opening myself for scrutiny by government agencies, the KRA come and everyone else, and taxation and everything else you can imagine, from permits and all that.
Yeah, I mean, the critical thing is the fact that the lender must be able to assess that capacity, because it's the basis on which you'll be able to extend the money to you. So I think it's like saying that you want to have your cake and eating it too. The cost of providing that information means that you then have got to formalize your business. It means that then you will have to expose yourself to the other parties, you know, that will necessarily come into the picture. It's not a bad thing to expose yourself to KRA, for example, because I think one of the challenges we have in Kenya is the fact that the people who are paying taxes are very few. And yet there is quite a bit of a pace generating revenue. And it is by coming into the space to play your fair share of tax payment that will have economic growth in this country, is that will have the government providing the necessary services to the wider populace that we have in the country. So I think it's not a bad thing to expose yourself and play your due part in generating the revenue for the KRA. I mean, there are others, for example, that will also see you and therefore be able to provide, and a number of them, but they could be fairly beneficial to the entity. It doesn't mean that if you are exposed to KRA, it's a bad thing. It just means that you now start counting your contribution to the economic development of the country.
Okay. All right, allow me to bring back Victor here. Victor, because clearly, even as we look at the number of people who are still being denied credit, and Abil has rightfully argued about the progress that has been made in terms of what is being extended out to businesses today. But from where I sit, again, it's not just the issue of availability, but also the affordability of the credit that you're giving me.
Exactly. Maybe just I'd like to make us pause and just look at the bigger picture. You know, whenever you're looking at a problem, you always have to look at the root cause of the problem. And I think one of the things that in Kenya, what we miss is we always look at access to credit purely from a bank perspective. And if you look at the structure of SMEs in Kenya, 92% of SMEs are micro. So it means that from whichever angle you try to look at it, they cannot be able to access credit from financial institutions. So then the question would be, what form of financing would suit the SME at that stage, so that you prep them for them to be able to access credit as they grow to small as well as medium. And I think that's a conversation that has to happen in terms of enabling the kind of investors that can play in that space, to allow them to be able to lend to SME at that stage. That's number one. Number two is a lot of our SMEs are in wholesale retail. So meaning that these are businesses that are buying to sell. And if you look at that business model, is that it is highly competitive. There is no competitive advantage to either player, and the profit margins are very thin. So this means that, of course, this business will be in an ending cycle of looking for cash, which can never be satisfied. So again, we have to help our SMEs through capacity building, etc., for them to move to sectors that can be sustained. And this is manufacturing, agriculture, etc. Because these are sectors that you can be able to access credit once, maybe to buy a machine, then probably you can be able to generate enough revenue for you to be able to grow. Otherwise, the trend that we are going in terms of talking about access to credit, yet our business models are flawed, then we'll be in a rut for a long time.
Okay. And definitely I want to come back to Habil on that issue that you've just raised. But even before we do, let me just bring in Joyce at this point. Joyce, I'm just looking at this statistic from a CBK study that showed that in 2020, of course, this largely due to COVID, banks turned away 28% of small businesses, while microfinance institutions declined at least 96% of the loan applications met with them in 2020. And I know this is largely due to COVID and most businesses closing, but really as an economy, what does it mean when we have such grim figures? What does it mean?
First, it would be good to know why they were denied credit, and of course, most of the time
part of the reasons.
is given. And in 2020, we said there was the COVID challenge. The crisis there meant that people had reduced cash flows. People couldn't pay employees. People couldn't meet demands from their consumers. Others had challenges accessing raw materials, either from imports due to the delays in the ports and logistic challenges globally. So that global problem really made a lot of SMEs have challenges operating profitably. And for that reason, it's only obvious that they couldn't get credit. And then there was an impasse for some of the SMEs who had to either close and wait, when somebody was just telling me, an SME, that when the COVID was announced in March and some containment measures came, people thought it was a 2-month affair or a 3-month issue and we'll be back to normal. So some people started exhausting their reserves trying to survive. And at the same time, there's no income, sufficient income coming in. So as a result, people realize, oh, this is a long-term challenge, and then they hit an impasse. So in terms of accessing credit, that has, of course, brought in quite a barrier to the SMEs. But I liked what was said about getting into businesses like manufacturing that are sustainable. And at CAM, we have the SME Hub, where we are helping SMEs to be competitive, looking at how they can be competitive across, how they come up with their business plans, the sectors they choose to operate in, like it was said, that can be there in the long term. But again, the question is, what do you want credit for? And whether it's to run your operations or to invest in equipments. For startups, that's where the bigger challenge is. And I liked the question around, should banks be the only ones, or are they really the only ones? Are we overemphasizing banks? And when we're doing our studies with the startups, we realize very few actually use the banks. You're either using your parents or your relatives or a circle.
Yes.
And for some people, they just want a little loan to buy raw materials and experiment. So the mobile, the digital platforms that have brought in quick money, without necessarily you knowing my history, and I can start with 5,000, do a little research on my product or some product testing for those in manufacturing, or test the market if you're just selling something that you've brought in. Although for us in manufacturing, so if somebody gives you that 5,000, how do you pay it back? How do you grow it? And the mobile money has really helped us to build on that kind of credit history. Also understanding your sales, your sales pattern, who are your consumers. So the digital platforms are becoming very good, and we need to have a very good ecosystem that is digital, that can help us then solve most of those documentation challenges, and even understanding who is buying what in the market, and how do you then innovate and supply those demands. Because again, it was said it's very competitive for SMEs, and Kenyans are not very innovative in coming up with new products and such. So you just copy your neighbor. In the process, you're having challenges of understanding even how to produce competitively, having the right price, because people want high quality products but at very affordable prices. So, and that's why things like mtumbas are still coming to compete in this market, or imports. And we ask ourselves, why is it cheaper to buy an imported product in Kenya than to produce it? If we solve those challenges, then SMEs can begin to produce in a competitive manner, and then have cash flows that can help them expand and even go to mainstream banking for long-term financing. Because in manufacturing, again, you can't grow with just small credits. And at some point, you need long-term financing that can help you expand, like buying bigger equipments that can give you better productivity.
And I am definitely sure Victor has some figures for us in terms of the number of businesses which actually rely on this mobile lending or digital lending apps for credit. But even before we go there, it brings me back to the point about affordability, because then we are talking about people who give you loans, unsecured loans, which means they are pricing their risks higher. And what does that mean for the business then? If I'm getting credit at a very high cost, it probably part of the reason why we see most of them collapsing just after very 2 or 3 years.
So for us at the SME Hub, what we've done is we help businesses first understand what are their plans, what is their cash flow projection, where is their market, and how then is their product life cycle. Because again, if your product life cycle, we see like producing cheese, for instance, takes quite a long time to, you know, curate and be able to sell to the market and somebody paying you back. So between that time, a very long life cycle by the time you get your money back in terms of cash flow. So your liquidity there is challenged if you don't have other products that you're selling that can give you quick cash, and then you can pay the bank. The bank or whoever is lending you, again, may request that you pay on a monthly basis or weekly basis, or you see, so structuring such financing mechanisms is a challenge depending on your nature of business. So can the bank accept that I pay on a quarterly basis, for instance, if that's when I expect my cash flow? So those conditions around how you pay is somewhere you can negotiate, depend if you understand your business and what you're doing. But credit, most of the people also are working with others in the supply chain, where you're partnering, let's say, with larger businesses that also extend credit to you. So you really don't need to have, again, headache of credit from the banks. So whoever you're working with or you've partnered with, like a large business, either you're subcontracting them or you're sharing the same distribution network and partnering or piggy banking on each other to sell some of the products, then they can give you credit and then you can pay them at your own pace. They also assure you a market, so you're able to get back your money. But delayed payments, again, bring the challenge of being able to pay credit. So it's not just access to credit, but affordability is affected by all these factors. You need to be paid on time once you supply people. You need, again, to have the right cash flow or product life cycle understanding so that you can be able to diversify and be able to operate. Because you have pay rent, maybe. You're renting space, you have to pay salaries, you have to pay suppliers. It's quite a lot if you're not able to understand how to run your business. So capacity building, as has been mentioned, is also a bigger area, and just bringing in hand-holding. Because training alone, we've realized, is also not helping much. There's that knowledge, but someone needs to walk with you and hand-hold you. So we have these mentorship programs where someone walks with you. We even allow you to bring in a few board advisors that can sit with you. There are so many retired people who have a lot of knowledge. We're asking them to come in and support SMEs instead of just staying at home and wondering what next in their lives after 60. So there are many programs that we are working on at CAM, but we are inviting an ecosystem kind of operation so that we support each other from different platforms. Otherwise, silo working in this country will not help SMEs so much.
But what you're doing is you're targeting SMEs, which are essentially in the manufacturing sector. So, and the question would be, what happens to the rest of all these other sectors? So let me just bring in Richard.
Thank you, Victor. I think I must make it clear that the approach the government takes is holistic. And maybe for just to give how MSMEs are categorized in Kenya, when you consider a micro enterprise, we are looking at an enterprise whose turnover is about 500,000 per year and employs up to 9 people. Now, if you look at if you consider a small enterprise, we are looking at a farm, or a business farm, whose turnover is up to 5 million and employs between 10 and 50 employees. That is as per the micro and small, as per the MSC Act of 2012. And we also have that segment of medium enterprises whose turnover is up to 800 million. These sectors have unique needs and unique challenges that we are looking at specifically tailored solutions in terms of how do you address this problem. And I think I must say, Victor, that access to credit is just a segment of the challenges that MSMEs face in Kenya. Probably it is triggered by other factors, underlying problems that really feed into, that limit access, that limit affordability, that limit flexibility.
I think we're struggling with Richard there, but let me just bring in, Habil at this point. Habil, from what Joyce has said, and I think the same idea that Victor was suggesting, that we perhaps should consider another segment or another option for lending for SMEs. It clearly seems that the restrictions that you guys have on collateral and character, as you mentioned, very interesting, that it is on top of the requirements, are pushing this SMEs to other, perhaps unregulated, segments or, lenders?
Yeah, one of the things, by the way, is the fact that these lenders, even the unregulated one, are following exactly the same things. The only thing is that they have automated the process. So when you go into that app, that app is, for example, trying to check on whether what your previous record looks like. And that's a way of assessing your character, the probability that you'll be able to repay back. It will be trying to assess your projections, what kind of sales are you achieving, and therefore the projections. So it's trying to assess your capacity of that entity to repay back. So a number of these apps have actually automated much of that process to bring it into a much faster way of assessing those forces that we talked about. But nonetheless, having talked about that, I think the point that you raised is the fact that given the formality and the process, the bureaucracy that the formal lending institutions go through, it's tending to push a number of the borrowers to the digital platforms, which appear like an easier way to access the money. But of course, you'll realize that more often than not, they'll be complaining that either the repayment period is too short, or the amounts themselves are too little for them to be able to do what they have to do. So when they borrow the money, they end up not using it for the purpose for which it was meant to have been used. Whereas in the banks, what will happen is that they'll try to ensure that the money is put to the use for which it was intended for. So they'll even insist on possibly paying your supplier directly rather than giving you the money to go and pay. So such kind of controls are put in place to safeguard the probability of the fact that the money will come back. Whereas on the easier, more or less, what you can call the digital platform, some of these controls may be relaxed, which may lead the borrower from misusing the money rather than using it for purpose for which it intended to borrow the money for.
Habil, allow me to challenge you on something. From where you sit, would you say that smaller borrowers and smaller businesses are riskier borrowers when compared to these other established businesses?
Not on a blanket case of saying that they are riskier than the larger borrowers, but on average, if you look at some of the challenges that we talked about, like for example, the informality. The informality itself makes the entity riskier. And that would be a fact, because one is that you don't have access to a lot of information to be able to assess the worth of the entity, the capacity of the entity. If you look at, for example, their inability to exploit new markets, they have got a lot of challenges, either from the point of view of opening up new markets or the point of view of developing new products and services to be able to access the new markets. They have got quite a bit of challenges. The bigger established entities have somehow worked through these and have got clear frameworks for developing new markets, developing new products. They have got teams internally that are working on that. If you look at, for example, their cost containment measures, a number of the smaller entities may be producing goods at a price that is higher than what they're able to sell it at. So they are not quite conscious of the fact that they are not actually making money on the product. They are actually making a loss and continuing to produce the same item at a loss, and most likely borrowing from any of the other entities. Now, for you to be able to see the fact that this product is not profitable, you need good records. And a number of the capacity building entities that you have talked about try to help these entities to build the good records, to be able to track their performance, be able to assess the fact that the cost is commensurate with the return that you're getting on the product, for you to be able to return a profit, not only to meet your costs, but also to return a profit to pay back the lender who lent you the money. So I think there is quite a bit to be done to enable these entities to be able to access credit. It's not just the issue of, you wake up one morning and you then access financial and the money is given to you. We do sympathize with them, and therefore there is need for us to put in frameworks to support them eventually to be able to access credit that's affordable.
Yeah, the reason I asked you that question, Habel, is because, I mean, I saw a statistic, a research, findings of a survey by ICA Lion earlier this year, and it showed that from the amount of non-performing loans recorded by lending institutions that I think in 2020, a huge chunk of it was actually attributed, which is, essentially people defaulting on their loans. A huge chunk was attributed to corporates and not SMEs, and which brings us to the question whether this whole thing of SMEs being risky is actually a fact or a myth.
It's interesting that you give that statistic. I think the critical thing is the fact that if you look at the amount of outstanding credit in the financial institutions, you might find that a bigger proportion of it, in terms of the quantum, is from the bigger entities. So naturally, any default will also be from the bigger entities. SMEs may be large in terms of number, but in terms of the quantum may not be significant in terms of the proportion of the portfolio. So when you look at the distribution of the defaults in terms of the NPLs, naturally you also find that the bigger entities have got a bigger proportion. The SMEs may be more in number, so you might have more SMEs defaulting in number, but in terms of the quantum, in terms of the size, the proportion of the portfolio, it may not be that significant. Okay. So that research statistic is actually true, but I think we need to get the context of the picture.
I have to take a break, but Victor, in just 30 seconds before this break, can we afford to rely then and say, that because the banks have locked us out, can we rely on digital credit and mobile credit?
Of course, so that's the current state of play in terms of access to finance, because now, with no avenue, mobile credit has come and given financial inclusion to SMEs. Of course, where they're currently playing is they are only lending on utilities, on cash flow financing, which of course in the short term can be able to assist, but in the long run, it cannot be able to enable SMEs to unlock value through long-term credit.
Okay. And we'll come back to why that, because especially on the issue of interest. But we have to take a quick break. But before we do that, some of you have been talking to us on social media. We asked you to be part of this conversation. Our question was, are you a small business owner? And what challenges have you faced in terms of accessing or obtaining credit to expand or start your business? Anthony Musembi says, being asked for bank statements, yet a majority of us use phones to keep our money and for transactions. I think that's the issue of bookkeeping. It's been raised by both Joyce and Habel. Chris Santos says, no institution offers such loans, mostly to small-scale traders. Thank you, Chris Santos. Yes, we have more. Better Life High says, demand for title deeds, logbooks, etc. by banks. That's the issue of collateral. We've also discussed that. Imende says, effect of COVID-19, hence no savings. We live from hand to mouth. I think Joyce has also addressed that. And when we come back from this break, this conversation has been ongoing for 10 years. There have been solutions which have been put forward, including STAWI, including credit guarantee schemes. But the question is, have they worked? Why are SMEs still struggling to access credit? All that after this quick commercial break.
Customer preferences are changing daily. You wake up one day, an innovation has come up and the customer wants a service in a way that you've not delivered before. Textbook Center aims to provide service, products and solutions that exceed our customers' expectations. Partnering with Sendi Transport ensures that we are able to deliver on our promise of being more than a bookshop.
Did Did you know at Ruiru Mabati Factory, we offer free delivery within the same day? Did you know at Ruiru Mabati Factory, you can open an account and lipa pole pole at your convenience? Did you know at Ruiru Mabati Factory, you can get customized sizes according to your roof plan to avoid wastage? Call us now on 0111 050 700. Ruiru Mabati Factory, mali safi kwa bei poa.
I'm growing up, I'm growing into every moment. So if
Nurture the moment. Minute Maid Nutri Defenses, fortified with vitamin E and zinc to help improve your defense system.
Now start.
Wait just one moment, Chris. Stay right there. Not a party, we're working. Lancho is on another level.
Is he? Off you go.
Maybe adjust the levels a little bit.
No. Just leave it.
Can we do something about the reverb?
Sure we can.
Okay, go ahead.
No. Leave it.
Get a 2-bedroom apartment at Cash 7.5 million and a 3-bedroom apartment at Cash 8.5 million. All units are ready and you can purchase an apartment with a tenant and start enjoying immediate returns on your investment.
Kwa nini kunichenga?
Miaka mitatu kule Japan.
Kidogo tu.
Usomea kudunga watu.
Utamu tu.
Sindane.
Jamani, tunachenga mpira ndani ya gumzo la Sato.
Sitaki mzee aliezeka, nataka kijana. Sasa ni
Kazo wewe una vita na sisi niteleza.
Bila utakuota kidogo.
Ngoja. Hata mimi.
Tukijadili masuala yanayokuathiri wewe katika jamii.
Hii ni sura yangu na hii sura imeolewa.
Na mambo mingi kwa ndoa ambayo hayahusiani na mapenzi peke yake.
Penda kweli lakini pia tumia bongo.
Naloogopwa kusema na wengine Frida twaliweka wazi.
Huyo mwanamume wa kizungu akaja na pupa mwisho akabakishwa na kachumbari na maavocado.
I'm not a burden to her. Like she'll be feeding me like this.
Huyo babu mimi namuelewa. Anajua anakoenda. Shiro hata afadhali ungeniuliza ngapa leo ndugu yangu mdogo.
Ombea.
Abule by Pato Ranking. Dial star 812 star 801 hash. Skiza na Nation. Lucozade. Energy to get through it.
Very beautiful pictures of Umoja in Nairobi. Radha, thank you for saying that. This is your world on NTV this morning. We are talking about micro, small and medium enterprises and the challenges they go through when accessing credit from financial institutions and other different lenders in the market. To help us with this discussion, I'm still in studio with Joyce Njogu. She's the head of consulting at the Kenya Association of Manufacturers. Joining us virtually this morning, Victor Gola, managing director of V4 Consult, and Habilo Laka, the CEO of Kenya Bankers Association, as well as Mr. Richard Ipero, the director of strategy and planning at the Micro and Small Enterprises Authority, that is MSEA. this conversation definitely is about what you as a business person face, the challenges you face when trying to access credit. We asked you to do this, to be part of this conversation on social media at NTV Kenyan at Victor Kiprop _. Use the hashtag #NewNormal to send us your tweets. You could also call in on the numbers that will be below your screen. But we also went to the streets and asked Kenyans what they think, different businesses, what they think about accessing credit for small businesses in Kenya. Let's get to listen to another batch of business owners in Kenya.
Unaweza omba pesa, baada ya kuomba pesa, uncertainties kama corona ama moto ama vita fulani inakuja inaharibu biashara, baada ya hapo benki hawataelewa. Sasa benki hatua ile wanachukua kama wasipoelewa ni kwamba wanakuja kufuata wewe, wananyang'anya wewe hii, kama una kitu wananyang'anya wewe, wanaenda kusukuma wewe, wanaingiza mahali pengine naitwa CRB. CRB sasa ni mahali, ni kama msumari ya mwisho ya kumaliza maisha ya mtu mwenye alikuwa anachikokota apate loan ili apone. So ukishapikwa CRB hakuna mahali utatoka hapo, hiyo ni msumari ya mwisho. Kama hii ya CRB wangeona njia ya kusaidia watu, si kwamba for example CRB sasa ukiwekwa mtu ukienda mpaka ufufuke uombe loan ukuje juu, ukitaka kuomba tena utakikani. Unaona? Sasa utakikani, na labda ile failure ya hata one is not failure ya hii ingesaidia wewe. Wewe sasa umekuwa atui.
Tunachukua loan lakini interest ziko juu sana, saa zingine unapigiwa simu ulipe na hata maybe hauna uwezo wa kulipa. So ningependa watu wenye wanapeana loan warudishe interest chini na pia wapewe watu grace period yenye inaweza fanya mtu aweze kulipa.
Kazi imerudi chini. Vitu kwa supermarket imepanda bei. Tunakopa loan lakini kulipa ni msukumo sana. Tungeomba watu wenye wanakopesha watu pesa kwa wakati kama huu waweze kuelewa watu. Kwa sababu changamoto in ground hapa ni mingi. Kupata pesa ili ulipe hiyo deni, tungeomba wapunguze hiyo deni, interest ikuwe chini, kuelewa maisha ya wananchi ya kawaida. Mtu ambaye anapata mapato yake ya chini aweze kusaidika.
The mobile banking loans are the rates of paying, also the phone calls. Utapata kwamba watu wanapigiwa simu, they're being harassed over the phone, that lipa usipolipa, they're being threatened. So utapata, unajua kama saa hizi watu wako na pressure mingi za COVID, pia uchumi. So unapata mtu akipata hizo threats and everything, utapata next time akishalipa hata kopa tena.
Wenye wanahusika pande ile wasiingize Wakenya wengi kwa CRB. Manake saa hii karibu 80% ya Wakenya wote tumekopa pesa, tuko na loan. So wakituingiza kule baada tujui tutasurvive namna gani, manake ni maisha imekuwa ngumu.
App za kukopesha pesa hizo zinaumiza vijana sana. Zinaumiza sana ambapo kuna interest iko juu. Alafu ukienda kwa bank pia wanaweka restrictions ni mingi, wanataka securities, wanataka guarantors, na kupata hawa guarantors pia ni shida. Kwa vijana kupata pia securities ni shida. So kuna ile mvutano na kung'ang'ana pia ndio uweze ukue stable kufanya biashara Kenya. Haya, ukikuja interest kuna wale pia wameanzisha biashara za Shylog, wameregister pia wanaweza kupeana pesa, but interest ambapo ziko juu. Utapata the cheapest mtu atakupatia iko around between 15 to 30%. Ukishachukua hata uweke kwa biashara, utapata biashara yenyewe returns zinakuwa low na zinaendelea kuumiza. So serikali inafaa iingilie kati, iweze kusaidia vijana kuanzisha biashara kama ile youth fund. Yes, youth fund iko, but pia pale kuna restrictions zao tu. Watakwambia pia wanataka security.
Small business owners in Eldoret and Bungoma just giving us their views on the challenges they've gone through in trying to access credit from the formal market. Joyce, clearly there's quite a similarity between what they all have to say in terms of their experiences.
Yes, there are many similarities, but I wanted to start with the CRB, the comment on Credit Reference Bureau.
Yeah.
You know, when it was launched, there was a lot of expectation that now that there's some history or some record of how you're performing, you should enjoy lower interest rates and access credit faster. But we need more information on whether that is happening, because you find you're accessing credit at the same interest rate for many years, even when you're really a good payer. But again, he was talking about if you fail to pay and you're reported to the Credit Reference Bureau, it's the death of you and will not access credit at all. Maybe later Habil can tell us, how do you get out of that sentence that you're a poor payer? How do you build back your credit worthiness so that people don't see a report to Credit Reference Bureau as the end of it, but really should be a process of supporting you to learn how to pay back, or how to get credit where you can afford and use it meaningfully to grow your business. The other area was collateral. It is true that collateral, even if we move to movable assets, young people don't own cows, they don't have sofa sets probably if they want to start their business. So they still don't have any movable asset to share unless they are given by either their parents or something. So there's still a challenge around how do you support startups. We've been able to identify some angel investors, and but they're also very critical in terms of looking at the innovativeness of your idea. So again, we go back to what kind of business. Innovative.
If I'm selling milk.
You see, if you're selling milk, many people are selling milk. So chances of you making profit and and being able to pay back credit or the loan you have taken also is low. And then your milk could go bad. There are so many risks, especially if you're not.
The problem with some of those angel investors and the people we bring on board who are after brilliant ideas is they don't consider the local situation, at least from where I sit. I mean, there are people who go into business because they just want to go into business. They think about the idea very well. They look at the execution, the profit, the viability of the idea. But most, especially for those who are micro, small, don't really have actually time to consider all those things, because sometimes it's just going into business to find a way of sustaining your family. So you think, I don't have a job, COVID has got me fired, let me start a milk business.
And that's fine. And I just wanted to first say, when I say angel investors, I'm not talking so much about the big ones from Europe or somewhere. I'm just talking about even people like my neighbor or my relatives, or even just my, somebody who likes what I'm talking about and is already a strong business person and they like my idea. So a place to incubate that idea is a big challenge actually for young people. Where is this market? What does the market need? And we know government has come up with the industrial development centers or incubation centers, but we also have private sector incubation platforms, or really people who can help you come up with market information that can help you come up with the right products to provide solution there. And we have also some companies helping you with product formulation, pricing, and even how to access those markets. If we solve those small challenges, of first of all doing the right business, selling the right things that are needed in the market, meeting the right solutions or providing the right solutions to the market or the consumers, then again we can move comfortably into issues of credit, because now you'll be able to have a market demand that you can supply at the right price or in an affordable way. At the same time, you can have enough money to now start taking credits and grow your business. And as I said earlier, we need all types of credit, of course. Short-term ones, which the mobile banking is providing because of the gap, are still good, even if the interests are high. We see people still making use of that. I'm assuming that you are making use of it well. Otherwise, there are those who misuse, which is another category. But those who use it well are actually very proud of that quick money. But again, with the banks, then we need the long-term kind of financing. And financing, we've seen other innovations coming up where technology providers, for instance, can give me some credit allowance and payment systems, and they come in with very good capacity building programs where they build my skills to utilize the equipment, they help me to optimize that equipment, and at the same time to make sure I'm producing the volumes that can give me economies of scale to beat competition. We have a lot of imports coming into this country. They come in very cheaply from all over the world, and you are trying to produce here locally and you can't compete even with that price. That alone puts you in a cash crisis, because again, Kenyans want affordable products. If I can get a suit cheaper, whether it's from Turkey or wherever, I still won't buy yours however much you tell me you've made it in Kenya, because we have the made in Kenya, buy Kenya, build Kenya, but at the same time we have to be competitive. So that's where that formula of being competitive, competing with the rest of the world, is what we work with at CAM, whether it's the taxation policies, all the fiscal policies that affect us, but also productivity within your within your working space.
Okay.
Yeah, how efficient are you, whether it's cost-wise, profitability, the right people, the right skills you're putting in place, the right innovations. So there's quite a lot that has to be done, which SMEs then struggle with, unlike large companies that can afford to keep innovating, hire the best talent, be able to produce in volumes, enjoy economies of scale, compete globally, access even large markets, not just here, but even, you know, large export markets. We are going to African continental free trade area. So you see, that's a huge market that people are looking at. How do you, you know, take advantage of that market? And for SMEs, then we need to begin to think of how do we then consolidate different businesses or a lot of partnerships that can help us move forward. So young people have those problems. We have women also. They don't own collateral as much, you know, especially in the rural areas. A lot of women share assets with their spouses, so the men can be able to access, you know, collateral easily. But most of the time, traditionally, even if we purchase land together, it will be registered in the name of your spouse, your husband, for instance. So accessing that to take loan, or even selling a cow which is probably owned, you know, or assumed to be owned by the man, and arguing, you know, with lenders of our ownership, who is the owner. For instance, do I have a certificate to show that I own 10 cows? What are these things that need to be at the, you know, the information, a lot of information needs to come through.
Okay.
Yeah, thank you.
Allow me to bring in Richard at this point. Richard, because clearly from this conversation over the last 40 minutes, there are three things that we can never run away. This is my key takeaway. You can argue differently. But the issue of risk and whether banks will lend to you if they deem you as a riskier borrower cannot go away. The issue of course, the collateral that they need. And also the issue, which has also been raised so many times, the issue of the risk that comes from the pricing which comes from the risk. And government has tried to and solve much of these problems by creating, let's say, SME only funds. We've seen Biashara funds, we've seen women enterprise funds, we've seen the SME credit guarantee scheme, all of which are initiatives which were meant to address all these issues, the riskiness of the borrower, the issue of collateral, as well as the high interest rates, by making sure that they can get, you know, credit at affordable rates. But the question that I have is, 5 or 10 years after all these initiatives, have they worked, Richard?
Victor, I think let me start by really first from the callers, from the comments of in terms of the people who are complaining about the issue of CRB. Maybe I can start from there. Issues of grace period. I think the bottom line here is liquidity position is slow among these segments. They're having a liquidity problem that we are addressing as a government. The government is addressing. And particularly the approach the government is looking at is that actually the government is preparing this segment to be able to access credit not only from government agencies but also from private credit service providers. And the interventions, as I explained earlier on, is that some of them will take time to be realized, some of them in the short run, some in the long run. For instance, through creation of government agencies like MSEA, whereby we prepare this segment that before commercial banks can consider them credible or credit worth to access credit, we bring in the aspect of really enhancing their capacity to, first of all, identify the business they can run or they can establish. Because there are many probably who get into business without really identifying which line. And I'm looking at a number of segments that this MS is engaged in. Apart from manufacturing, we have those in agribusiness, we have those in business, we have those in trading, we have those in service, we have those in mining. So those segments really are the major segments that these MSMEs fall under. And particularly looking at probably agribusiness. Kenya being an agricultural country, most of them are in the agribusiness sector. Now, the government, in terms of de-risking, because it's really, there's a perception that generally the aspect of risk, yes, true. Aspect of collateral is also a big challenge, which the government through, in terms of really widening collateral base, in terms of really, apart from establishing its own funds. For instance, we have the Stawisha funds, we have the youth fund that provides credit to the same segment. And of course, it's not reaching all the youths or all the MSMEs. We now have the credit guarantee scheme that was rolled just in 2020, really to de-risk the sector in terms of really making reducing the perceived risk among the segment. And I think something else that I must say is that the aspect of formalization comes in handy that the government is undertaking seriously, really to bring these MSMEs, especially MSCs. Most of them are not registered, and that really limits them from accessing credit. Some of them may not be recognized when they approach a financial institutions based on the records that they provide. It really exposes them. They make them, in terms of when they are considered for credit provision, they are considered not very attractive compared to other segments, probably like medium enterprises with well-established structures. So through a credit guarantee scheme where we have 7 participating banks, the government is encouraging really commercial banks to get into really reaching the segment. And I think I must say that about 65% of credit is provided by commercial banks in Kenya. I know we also have the SACCOs that provide credit, especially the agribusiness. We have the digital mobile that is coming in really to fill the gap, because the way digital lending is thriving in Kenya is a result of some gaps that we're experiencing among the mainstream lending institutions. And they've come in really because they're able to get credit immediately. They don't need to give collateral to access the credit. But again, there's a catch, because now the way those loans are structured really is really killing the same business, because probably there's no grace period. And there's a mismatch between most of these micro and small enterprises business cash cycles and when they're supposed to repay their loans. And that's why they land in being listed at CRB. Then that again kills them. So I think as a government, in terms of having that initiative and also establishing the other funds that are in pipeline, like for instance in MSEA, it provides for creation of a fund. Yes, that fund will operate. It is at an advanced stage, but the fund will have some requirements that this category must fulfill. Collateral is one of them. Of course, we are also looking at considering flexible collateral that these MSCs can provide. And as we're doing so, as government also, the government is partnering with other commercial banks. Like for MSEA, we really partner with other commercial banks like Equity Bank, whereby we discuss with them, we engage with them through partnerships to see that they flex a little bit their requirements, so that the MSCs who are registered, who are formalized with the, can be able to access credit to start or expand their businesses. We're also looking at training opportunities that these commercial banks are offering to the same category, because unless the ground is well prepared, unless the MSCs are well prepared to take credit, then the default rate is expected, and which affects the ability to expand their businesses. In terms of really also enhancing access to credit, the government is also providing grants through special or through projects like KEO, which is a government World Bank project whereby it's providing grants to the youths, is providing business training opportunities to the youth. So far, I think about close to half a billion has been provided to the segment. So those are the initiatives that the government is putting in place really to unlock this segment in terms of starting the business. And when it comes to training, the basic thing is identifying the talent, identifying the line that an MSc would like to pursue, and then working with the same MSc, growing, nurturing same MSc to a point where they're able to integrate upwards. Incubation centers and centers of excellence that we have actually are there really to see that the youth or MSCs are able to take advantage of these facilities provided by the government. So I think the funds in place are there, yes, and there's also an aspect of information asymmetry which must be addressed in terms of the MSCs, which we are doing in terms of really building the capacity to understand, yes, credit is not, credit must be repaid. Some of them probably take credit, think it's government money, it's free money, they don't want to pay back, which is a wrong notion among the same segment. So what we're doing is that we need to build their capacity to understand that credit, if they're borrowing from a SACCO, from a commercial banks, from wherever they're borrowing, the loan must be repaid. They must also be able to scan and understand the terms of the loans before they're able to take loans from such institutions. So it is really a role that they're doing as an institution, as government, and the bottom line is that one, they must be formalized. It's important that we bring them to understand how many are they in the Republic, where are they, which businesses, so that they're able to be assisted by the government.
Okay. Victor, let me just bring you very briefly on this, because clearly from the way Richard speaks, there are a number of initiatives that are in place, tens of them that I didn't even know myself. From your interaction with businesses out there, are they aware that there are such opportunities and initiatives?
Of course, information asymmetry continues to be a challenge in terms of the kind of interventions that government is putting out vis-a-vis, the information reaching SMEs. But one of the things I would want to point out is the issue around formalization. So in Kenya currently, SMEs are dying. So on average, we are having 75% dying within the first 3 years. We bring in COVID and we are seeing SMEs struggling. And what we are telling them is before you can be able to get support, is you need to formalize. Does it make sense for someone who's having a turnover of 500,000 annually? That's maybe around roughly 40,000. Would it make sense for them to even think about formalization, looking at just cost alone? And I think for me, it's quite unfair that we are not able to support SMEs currently constituted, and just telling them you need to formalize before you can be able to get support. And I've mentioned this on very many platforms. SMEs are in chamas. A lot of these chamas are registered in one way or another. We need to find a way of cleaning up that data and supporting SMEs where they are. World Bank, through the long shadow of informality, has said that you can be able to give support to informal sector SMEs through either cash grants or income support, in-kind support, or whichever mechanism. So that we ensure that even as we discuss SMEs, we assure that we are supporting them now so that they are not dying. That's number one.
Okay.
Number two is we need to also stop this conversation of saying, financing is a bank-only conversation. We need to look and again bashing the unregulated quote-unquote players. What we need to do is to look at the financing ecosystem in totality. Because SMEs at different stages require different forms of capital of financing. How can we ensure that all these players, whether it's digital banks, angel investors, VCs, etc., are working in concert? So at the end of the day, we are working towards supporting small SMEs as they grow, whether they're SMEs or the way they're startups. So that conversation becomes forward-looking rather than pointing fingers and saying banks are bad or the unregulated lenders are bad.
Okay.
Lastly, is we need to look at the root cause of the challenge of SMEs. Financing is a smokescreen of a bigger challenge around, which is access to market. So if you look at Vietnam, if you look at China, if you look at Singapore, they prioritize specific sectors that can be able to give long-term value to the economy. What is happening in Kenya is we are pursuing multiple strategies. We are pursuing second-hand clothes and also trying to support local manufacturers. That cannot work. We can't have someone selling Tumba in Kikomba and someone at Uhuru Market trying to compete, and we know that's not fair. So, and we cannot tell the SME, you're not competitive, your price is high. They are facing systemic challenges that makes them not to be competitive.
Okay.
So we need to look as a society from a policy perspective, how can we be able to support our SMEs to be able to manufacture and be able to link to global value chains that can enable us to thrive.
Okay, thank you, Victor. And definitely, I don't know if you are if you overheard me and Jess, because that's part of the conversation we had off air. But in just 30 seconds, Habil, before I take this break, just 30 seconds, part of the solutions that were brought forward after the red cap was lifted, I think in 2018 or 2019, was the issue of STAWI. It was meant to make sure that those who cannot have been locked out of the formal credit market can be lent, especially at a lower rate. My question is, has it worked? How far is the issue of absorption for this fund?
Yeah, I think there are two things there. One, you talk about STAWI, which was an initiative that was put into place soon after in fact, during the red cap regime. And subsequent to that, there was also the National Credit Guarantee Scheme. I think all of them trying to achieve the same objective of ensuring that the SMEs who have not been able to access credit are able to access credit. So STAWI was an initiative of the banks a number of banks got in there. They now are facilitating SMEs to access credit. But there is, of course, an automated appraisal process that is along, on the platform. So you still go through some form of appraisal process.
Okay.
But I think the other one is the National Credit Guarantee Scheme, which has been talked about. 7 banks are now participating financial institutions on the program.
Yeah.
It's already being rolled out. There is a proposal to expand it further to participating institutions in terms of banks. The fund is currently, I think, 5 billion. It is being expanded to a little bit more with the participation of other international financial institutions. So there is some hope there of the fact that SMEs would be able to access credit because the format of the guarantee scheme is addressing the issue of collateral, which has been a major problem for the SMEs.
All right. Abil, allow me to just cut you short there because of this break, but definitely when we come back from this break, we'll be asking ourselves the way forward for this conversation. I'll be asking each of my panelists what they think should be done differently so that all small and medium enterprises in Kenya can be able to access credit freely at any time they want, especially at an affordable rate. But that's after this quick commercial break. Don't go too far.
Enjoy the best family entertainment on StarTimes Classic or Smart Bouquet.
Oh, yes.
Subscribe to Classic Bouquet for only 899 for 30 days or Smart Bouquet for only 999 for 30 days. Come on eBay. Ni StarTimes.
Lucozade. Energy to get through it.
Wonderful, your baby's quite active.
After I discovered Molfix, I rediscovered my baby. She's jumping and running around.
Well, we call that the Molfix Comfort. Thanks to its elastic side bands, Molfix provides freedom of movement for your baby. All babies deserve a high-quality diaper. You should also try Molfix.
Fresh fried ginger has ginger oil, which is good for a healthy living lifestyle. It combines wonderfully on salads, stir-fries, when basted on roasted meat, or simply sprinkled on your favorite dish. Now available in 250 ml, 500 ml, and 1 liter.
NTV Jioni, habari za kina, fasaha, tendeti na za kuaminika.
Every Friday at 10 p.m., NTV is dubbed as the home to the biggest and most fascinating people on TV. We give you a fix of the latest trends in entertainment. Pack your eardrums with the freshest hits. And bring you the biggest names in the 254 and beyond. Energy, synergy, fun and flair. If it's hot, it's on the trend. If it's not, well... Catch this exhilarating show every Friday from 10 p.m. with the freshest trio, Osoro Biamono, the Scratch Master himself, DJ E, and your sassy homegirl, Amina Abdi Rabar. All this on the trend, only on NTV.
Lucozade. Energy to get through it.
Thank you for staying with the world on NTV. We have been talking about SMEs, or micro, small and medium enterprises, MSMEs, and access to credit. My guests are still with me: Victor Agola of VIFA Consult, Jason Jogo of the Kenya Association of Manufacturers, Habi Lolaka of the Kenya Bankers Association, and Richard Ipero of the Micro, Small and Small Enterprise Authority. But before we resume that discussion, here are your biggest business stories in the country at the moment. And 5 months after President Uhuru Kenyatta appointed a task force to look into power purchasing agreements between cash-strapped Kenya Power and independent power producers, popularly known as IPPs, these IPPs have defended themselves, saying that they are not to blame for the escalating cost of power in the country. This was one of the issues which emerged during the meeting between IPPs and the National Assembly's Departmental Committee on Energy, as Alex Mwangi reports.
Let me say this. The chief executive of Tsavo Power Company, which is an independent power producer or IPP, Engineer Julius Riungu, has defended the existence of IPPs, stating that it's unfortunate that the high energy demand that the government had anticipated has not materialized. The engineer was for decades a state employee.
I worked for Kenya Power Lighting from the year 1970 to the year 2005. I started as a student. I was sponsored by KPOC to go and study engineering. And that time, the company was run by expatriates. And we were among the first people who were brought in to run the company as locals. And I retired in 2005 at that particular position of Deputy Managing Director.
Tsavo Power is one of the IPPs that honored the National Assembly's Energy Departmental Committee's request to provide information on why there is a significant variance in the price of power supplied by the Kenya Electricity Generating Company, KenGen, and the IPPs. Engineer Yungu had an interesting path to the corner office at Tsavo Power.
There was a consultancy job required at the Ministry of Energy, and this is there was a World Bank project that was undergoing, and they required a consultant to assist the PS, and I was appointed as a consultant for electricity, for electric power to the PS. And in 2008, I then joined the Tsavo Power Company.
Tsavo Power was unwilling to table its contract with the government before the committee, citing confidentiality clauses. Tsavo Power's output is largely focused on the coastal region.
We have 4 plants in the coast doing this part of generation. Kenya has got 2 plants. Abai Power has got another one, and we have the other one.
Another IPP to appear before the committee was Triumph Power Generating Company. Alex Mwangi, NTV.
Elsewhere, East Africa's automotive online market is presenting a sweet spot for investors, with Nigeria's AutoCheck acquiring Cheki Kenya and Cheki Uganda for an undisclosed amount. In Kenya, the Cheki platform is estimated to have 700,000 users and lists about 12,000 vehicles every month. AutoCheck says it sees a strong growth opportunity in the East African market, given the relatively high asset finance penetration, which is lacking in the West African market. Kenya reports an average of 100,000 new registrations for motor vehicles every year. Kenya's automotive policy is being considered by the cabinet, with the main goal being the promotion of locally assembled motor vehicles.
Today, if you ask an ordinary Kenyan in the street where he wants to buy his vehicle, he'll be looking for an imported car. And that is the biggest challenge we are having, that their competition from the imported vehicles, second-hand vehicles, is giving us a big challenge.
Right, let's just pick up our discussion from where we left, and I'm still with my guests as I promised. Jace, let me just come back to you on this then. Now that we have dissected this whole issue, what should be the way forward, at least from where you sit? What would you like to see differently on this aspect of SMEs and the access to credit?
First, I want to appreciate that all of us are speaking the same language. We've identified similar challenges. So for me, the need there is that we need to form strong partnerships and a working framework, especially to implement all these policies that have been laid out for SMEs. We've heard from MSMEs the kind of policies that are there in government support SMEs. We have the banking policies that are there also looking at how to support SMEs. But really, how do we have a continuous engagement or a framework where we are now measuring how we're engaging SMEs and helping them to come out and succeed? But then we are still talking about business, and businesses are there to support, you know, consumers, or to grow consumers, or to make money, of course. But again, you have to operate within a market. Market is the biggest issue that makes you get into a business, for instance. You say, oh, there's a market for this and a market for that. With the CAM, and we have come up with the many innovations around how to bring markets together. For instance, you know, having an ecosystem across the whole value chain of how people can work together. I know we've talked about mitumbas and such, but these people, they are traders. They could come and sell clothes that have been made by manufacturers. We could work with the people with borders to distribute, especially for the SME segment that also can't afford large distributors. So there's opportunity to engage bicycle reps, distributor reps, you know, when you're looking to access that market. But also we have programs for helping SMEs to integrate or be included in the bigger market space or market share that the large manufacturers have. One of which is we have a manufacturing export summit and expo, where we help SMEs to join the bigger manufacturers in selling their products and services. That way you're able to connect with who can also you can work with to subcontract, where you're guaranteed a market by, let's say, a large manufacturer. So if you're, let's say, in the automotive sector and you want to offer spare parts, you work with the, you know, the manufacturer of the motor vehicle. They give you a guaranteed market for a certain period. That way you're able to work well with the credit facility providers, because they can see your market, they can give you LPO financing, they can see where you're headed in terms of prospects for your business. So when we start working together like that, we're able to then grow our businesses in a more sustainable manner, and there then work backwards, because large companies have invested a lot in research, they understand their customers, so they work backwards in bringing back that knowledge to the SME as they supply them. So the SME is also trained to be able to be competitive and productive and be able to supply a large company. So if we work out that kind of connectedness, just first locally, before we go into the regions and globally, and we use the same mechanism even for global supply chains, then we comfortably can grow SMEs in a structured manner where they're already integrated in the global supply chains, and then access to credit becomes an obvious access factor that wouldn't be a challenge for us.
Let me ask you this. Now that you guys have some sort of hub where you train SMEs and maybe the things that they need to do and here and there, is there maybe a chance of negotiating with the hub and the likes who are afraid that, you know, they might default, they don't have this and that, and say, you know, for this group of SMEs that we have trained and we are working with them, we can assure you that, you know what, they are, let's say, legit, and you can work with them?
Oh yes, actually we have started working, we've worked with Kenya bankers in terms of policy direction and how we engage banks and understand the market, the financial market. But again, we work with individual banks where we sign agreements on how we shall provide information and also credit lines and different other financial solutions to SMEs. And in that space, we have also the business growth program, which we help SMEs to understand their strategies, their products, the market, their HR management, and even good manufacturing practices that can help them operate sustainably and also manage their costs and be profitable. So we have a good package of trainings which then links to access to finance. So we can use that, and we normally use that to tell banks, these people now are ready for business. We've done business diagnostics for them, and they are really ready to access credit. This is their growth plan and their trajectory. This is how they integrated into their value chain, just to show that that value chain is solid.
And it makes it easier.
Yes, so it becomes easier for the banks. We also do supply in terms of helping, helping manufacturers to access green, to green technologies and go green. And we've worked with banks also in that area, a few banks, in offering green technologies or project loans to buy green technologies or to help industries go for green products. And that way we also are working with banks to build their capacity to understand green projects and how then that supports manufacturers to be able to access, especially global markets that are looking for sustainable products, green products, people that are taking care of the environment and these climate change challenges. SMEs are also in that space, and they're saving a lot of costs from just complying to some of these environmental regulations, and there's a lot of reduced wastage in their production capacity. So we are open as CAM to continue engaging on these things. You can join membership and access more information on kind of services that we're offering to industries, and also the supply chain, so that distributors are part of us. Actually, we can't exist, we struggle without them. So we need all of them to operate profitably so that we can all grow this economy and contribute to the tax bracket, help improve many other services in the country. And most importantly, have our young people also getting jobs, using their talents and skills properly as we look to grow our economy and live comfortably in this country and in the world. Thank you.
I mean, this is almost sounds like closing remarks, but we're not yet there. I mean, Richard, from where you sit, other than the fact that maybe young men like me want to go into business, should always have in their mind that pesa ya serikali si pesa ya bure and must be repaid, what else should you want to see done differently, especially with regards to what you're doing from the side of government?
The way forward in terms of really to ensure that there's sustainability in the ecosystem, I think we must appreciate integration or integrated approach to provision of solutions, especially to aspect financing. So what I mean is that credit is not the only problem probably the youths or MS are facing. We need to have a framework whereby all parties integrate their services in terms of provision of credit, also in terms of building capacity of the same MSEs. Because credit only without building capacity of the people you're giving credit, really the ground may not be ripe enough for those businesses to grow. So the approach here is that the financial institutions and other sector players must embrace an aspect whereby we build capacity of MSEs at the same time as we also consider how do we provide credit to the same sector, and particularly an aspect of corporate governance must also be embraced among the same segment in terms of how do we ensure that we have strong structures apart from also aspects of record management, so that now when credit is provided, we are sure that yes, the money will be utilized prudently for the growth of the sector. I'm also for the opinion that proposing that we also enhance collaboration among the various parties. This is something that we're doing passionately at MSEM, whereby now we know that no institution can provide 100% solution to the MSE sector. We must work together. We all have a role to play. We have a role like from SEA in terms of on behalf of the government, ensure that there is conducive working environment, provide facilities for the MSEs to use, also ensure that the MSEs are competitive enough, embracing technology and ensuring that MSEs embrace technology to be competitive, to provide products that are standard in the market, that are competitive enough to be able to be sold in the market at reasonable cost. So we, at the same time, we then have other players that can now see how do we link up these producers, how do we link, how do you have end-to-end linkages between those who buy, producers and value chain players. Because without the linkage, without the chain being complete, then we have a problem somewhere. At one point, we'll have a problem in terms of cash flows for one of the segment along the value chain. So we're also promoting end-to-end arrangements among players, and government and non-government, so that now The MSC is the primary person to benefit from our perspectives. We want to protect every player, but MSCs are the primary persons to ensure that they grow. Again, I think aspect of information flow and information asymmetry needs to be addressed, because unless that is addressed, yes, I know it's just a general perception in terms of government money, but again, we must understand that, and even the MSC must understand that they must also be prepared. As they borrow, they must be prepared to meet some threshold before they get the money. A loan must be assessed. It must be evaluated. So they don't expect that they're just given free money. Even if it's free money from the government, it must be financing a specific venture that must be geared towards economic growth, generally benefiting the entire country. So, Victor, it is something that really requires a multi-approach among all sectors, so that we're able to provide solutions that meet, that are sustainable enough, not in the short run, but also not only in the short run, but also in the long run.
Okay. I mean, what I'm picking from you is whether you like it or not, whether it's from government, the private sector, or digital lenders, there has to be an assessment always that has to be done on a borrower before we give you the credit. Let me just listen from what Habil has to say, especially with regards to now reducing the number of people who are turned away every day by banks for one or two something here or there.
Yeah, I think one of the things that came to mind, by the way, as the presenters were making presentation, and even as we are hearing the people who are being surveyed, I think one thing was coming out. One is access to credit, and then the other one is the cost of credit. Kept, coming back and again. And I think from where I'm seated, there is one approach that you can use to tackle the dual problem of access and the cost of credit, and that's leveraging on technology. One of the things that clearly the COVID has shown us is the fact that leveraging on technology can solve some of the biggest crises that we face as a society, and this is no different from that. So, and I can see banks are beginning to push that scale quite a bit. There is a lot of reliance now on artificial intelligence to do part of what we are talking about. The 4 C's in terms of assessing the character of the individual, in terms of assessing the capacity. There's a lot of leveraging on artificial intelligence. Fuliza, for example, is a good product that came up, being able to lend small quantities to individuals, but putting it at scale because of leveraging on technology. So I think this is an area that we need to really support, not only just the bank lenders, but also the digital lenders and the others to really, not only bring the cost down, but extend the scope so that more individuals can be able to access credit in whatever quantities that they desire. The other thing that I think also was coming out quite clearly, we talked about, banks not just being the only lenders.
Yeah.
And that's partly because of the fact that the needs of the individual may be different. Debt is not always the right thing to get at whatever point in time you require. Sometimes you need patient capital. And by patient capital, it means that I'm somebody who by nature will not be requiring a repayment almost immediately, will be patient in there and support the entity and be paid in form of, having a stake in the entity. For example, we talked about angel investors, we talked about venture capital, equity capital investors, all those alternatives. Now, from where we sit, I think the critical thing is to form partnerships with all these various sources. And we have got an initiative we are calling the Blended Finance Program, where debt is just one of the components, but depending on the individual's requirements, you may be able to access part of what you are calling the patient capital as a blend with the debt and be able to support yourself based on your needs that you have. So I think we already have something working to address the issues we have addressed, but we need to scale it up a little bit. We talked about, for example, the movable assets collateral registry.
Yeah.
How many people know about it? What we need to do is to scale it up by making public awareness, awareness creation in terms of the actual consumers know that this is there. Should you not be having the landed collateral, you can use the other alternative assets you have to be able to provide collateral to the lender to be able to give you credit. We talked about the National Credit Guarantee Scheme. I wonder how many people are aware of the fact that this is available. It's supporting SMEs to be able to access credit. We talked about KBA's own initiative of the Inuka Enterprise Development Program, which is trying to create capacity in the SMEs to be able to access credit. How many of the SMEs know about this? So I think the challenge we have with us is to be able to create that awareness in the market for the SMEs to be able to leverage on these various initiatives to be able to access credit that is affordable.
All right. Allow me to bring in Victor at this point. Victor, clearly, from your point earlier, there has to be different levels of lenders, for instance, banks, digital lenders, and all others, and government lending to SMEs at different stages of their lives. One thing I wanted to ask you was the issue of digital lenders. You did a survey on them. Do you think the issue of regulation of digital lenders, which is currently in Parliament, would have any impact in terms of their formalization and bringing them on the table formally, and perhaps even seeing the rates that they charge come a bit lower?
I absolutely agree in terms of having some level playing field. So if you're looking at regulation, it's just creating a level playing field for the players to be able to engage business at arm's length. So I don't think regulation necessarily is a bad thing. It's just how it's the language that you use in terms of the regulation. Because what you don't want is to stifle innovation by just saying these are unregulated lenders and we don't want them. So I think the conversation should be, how can we be able to nurture this kind of lenders? That's number one. Number two is when you talk about an ecosystem in terms of financing, it means that all the different players have to be enabled. So when you talk about angel investors or when you talk about VCs, the question is, do they themselves as businesses feel that this is a conducive environment for them to operate in? Yeah, so I think that's the conversation that we need to have, so that we ensure that they're able to set up shop in Kenya and they feel comfortable lending to both our startups and SMEs. I think that has to be there on the table, because currently what we are seeing is Kenya, for example, is attracting a lot of VC capital, but a lot of that is not domiciled in Kenya. The transaction is recorded, it's booked, but if you look at where the money sits and where the fund sits, it's actually not in Kenya. So that's a problem that we need to solve to ensure that we get foreign direct investment domiciled in Kenya.
Okay. Thank you very much, Victor. And I think all of you have tried to wrap up this conversation, but in case we haven't mentioned anything, I'll give each one of you just 30 seconds to wrap. I'll start with you, Joyce.
Well, I think in terms of access to credit, we've discussed most of the challenges and the solutions which have been provided. But just for us to know that, once we have a conducive business environment in this country, the policies are there, they just need to be implemented as per the way they are scheduled, and we work towards making sure any new regulations does not increase the cost of doing business. We've just discussed how the cost of doing business is an impediment to accessing credit, because again, you're unable to pay that. So if the environment is conducive and we have a level playing field, for instance, formalizing the SMEs, and just a message to the MSMEs that formalization is actually one of the keys to growth. So it's a key driver to growth. So we shouldn't be afraid of formalizing, and anybody, even the mobile money, as we move towards digitization, we will naturally have to formalize if you want to play in that space, e-commerce space and all, and the world is going digital. And for you to be able to grow and sustain yourself or just exist for a longer term, then you have to embrace formalization. We just need to change the perspective of what is this and the perception around formalization, because it's been made to be, oh, KRA will call me. There's nothing wrong with that. So we are working with all regulators also to see how do we reduce cost of business, at the same time help SMEs, MSMEs to be able to also play in this market in a fair way and enjoy doing business.
Okay, Richard, your closing remarks, parting shot in exactly 30 seconds.
I want to assure the listeners that the government is committed to ensuring growth in the MSME sector. The government is committed to providing necessary support directly and indirectly to ensure that the sector grows. The government recognizes the importance of the sector in the economy. So, and also, I want to also inform listeners to probably get to know, to create, actually we'll do more to create more awareness in terms of available facilities, available services, so that players and MSMEs are able to enjoy those facilities, take advantage of the same for their growth and for the growth of the economy.
Okay. Thank you. Victor, strictly 20 seconds.
Yeah, so I think, as Joyce has put it, we need to rein down on ease of doing business so that we ensure that the cost of doing business is low, which would mean then formalization becomes a byproduct. We need to look at access to market through two channels. Number one is manufacturing, and as Joyce has put it, linking to global value chains. Number two is broadening the conversation around ICT so that it's not a Konza-only conversation, but enabling the startups in Kenya to ensure that they're able to they're able to try and they're able to really support SMEs. I'll give you an example. Twiga Foods supports over 30,000 different SMEs. Of course, access to credit is there and access to market is there. So enabling startups can be able to have a knock-on effect on supporting SMEs.
Okay.
Thank you very much.
All right, Habil, your parting shot in 20 seconds.
Yeah, thank you very much. I think what has come out clearly is the fact that each one of us are doing, we have got various initiatives that are going on to ease access of credit to the demand side of it. But I think what clearly is required here is for us to work jointly to create partnerships across the various platforms so that our efforts can be self-supporting, self-enhancing. Let's not work in silos. I think one of the challenges we have is the fact that we are each doing different things, maybe in the same direction, but not working together, and therefore not achieving the required objective. Now, then the second one, I think also is the fact that we just need to create awareness in our consumer public. We might be doing so much for the SMEs, but they don't know.
Okay.
So they can't access the initiatives that we are working on. And I think if we can work on those two, the partnerships and the awareness creation, I think all our efforts will be rewarded.
Okay.
Thank you.
Thank you very much, Habil. That's where we have to leave it because of time. Many thanks to my guests this morning. You've been talking about MSMEs and access to credit. Many thanks to Jason Jogu, Head of Consulting at the Kenya Association of Manufacturers, Victor Agola, the Managing Director of V4 Consult, Habil Alaka, the CEO of the Kenya Bankers Association, and Richard Ipero, Director of Strategy and Planning at the Micro and Small Enterprise Authority. My name is Victor Kiprop. Thank you very much for keeping us company. From me and the entire team, it's goodbye. We'll see you again tomorrow with yet another exciting conversation. Goodbye and God bless.